Welcome back to the Noob Selling Options channel, everyone. So glad you could join us today. Let's dive straight into this explainer and unpack the absolutely massive Wall Street price targets currently shocking the entire semiconductor market. I mean, if you've been watching the memory and storage space lately, you've no doubt seen some staggering numbers thrown around for both Micron and SanDisk. Today, we're cutting through the noise. We're going to look strictly at the data, the fundamental math, and the broader macro environment to figure out what is actually realistic over the next 7 months. Here is what's on the agenda today. First, the ultimate bull case. Second, the 7-month reality. Third, Micron's December target. Fourth, SanDisk's valuation wall. Fifth, the crash scenario. And finally, number 6, the final verdicts. All right, let's jump into section 1, the ultimate bull case and Susquehanna's massive bet. Let's start with a catalyst that basically set the market on fire. Mehdi Hosseini, a prominent analyst over at the firm Susquehanna, recently issued some wildly aggressive buy ratings, and it's all based on this idea of a massive structural scarcity of AI memory. Just look at the sheer scale of his prediction here. Hosseini lifted his price target for Micron, ticker symbol MU, from $600 straight up to $1,750. That is a massive jump, and it's driven by channel checks suggesting that memory supply is going to remain highly constrained all the way through 2027. And then there's SanDisk, ticker SNDK. He raised their target to a staggering $3,250. Now keep in mind, he had already doubled it from $1,000 to $2,000 just weeks prior. He's projecting that AI inferencing demand is creating this unprecedented surge for enterprise SSDs, completely led by massive structural purchases from cloud service providers. So, Section 2, the 7-month reality, sprinting to December 2026. Usually, when we see these analyst updates, they're looking at a 12 to 18-month horizon, right? But if we apply these numbers to a compressed timeline, specifically between now and December 2026, the math changes entirely. For Micron to actually hit 1750 by year's end, it needs an 80.2% sprint. To put that into perspective, that means adding nearly $800 billion in market cap in just 210 days. SanDisk, they'd need a 91.7% move. Both of these mega cap companies would essentially need to sustain a 9 to 10% growth rate every single month. Honestly, that requires an absolute market-wide frenzy. This brings us to a crucial point. We absolutely must separate fundamental corporate performance from the unavoidable forces of equity market gravity. Yes, the structural growth story for AI memory is undeniably incredible, but an asset's price doesn't just float in a vacuum, It exists within the gravity of the broader economy. Moving on to Section 3, Micron's December target, balancing fundamentals against multiples. Let's look at Micron's specific base case and paint a picture of a more realistic, no-crash scenario by the end of 2026. Micron really does have incredible fundamental meat on the bone right now. I mean, their revenue recently tripled to $23.9 billion, and they're operating at a historic 67.6% margin. Plus, their entire high-bandwidth memory production capacity for 2026, it's completely sold out. And because they're managing to do all of this while maintaining a pretty modest forward price-to-earnings ratio of around 10x, a steady compound growth rate pushing past $1,200 is actually fundamentally supported. Relative to its growth, it's cheap. Let's pivot to Section 4, SanDisk's valuation wall, or what we like to call the price of perfection. Evaluating SanDisk's short-term trajectory is a totally different ballgame because of the immense premium already baked into the stock. Basically, SanDisk is hitting a structural valuation wall after its historic vertical run, so expecting it to just double again is highly improbable. Think about this. The stock is already up over 535% year-to-date since spinning off from Western Digital. It's currently trading at a steep trailing PE of around 59x. To actually hit Hosseini's target, it would have to add $250 billion in market cap in just 7 months, becoming a $500 billion enterprise. The law of large numbers heavily suggests that the broader Wall Street consensus target of 1368 is just way more grounded in reality. So if we assume the market stays completely healthy and avoids a crash, the realistic December probabilities look a lot more like this table. Micron, currently sitting around $971, has some moderate upside, with a likely year-end range somewhere between $1,250 and $1,400. SanDisk, hovering near $1,695, is essentially priced for perfection right now. Instead of blasting uninterrupted toward 3 grand, it's far more likely to experience heavy consolidation and trade sideways in the $1,500 to $1,850 range. But what if things go south? Section 5, the crash scenario, for when macro breaks. We have to address the elephant in the room. Those base case targets are entirely reliant on a perfectly stable economy. So what happens if the macroeconomic environment suddenly hits a wall between now and December 2026? Well, if a broader tech sector correction hits or a full-on macro recession takes hold, all that bullish math we just went over goes completely out the window. And frankly, it will not matter one bit that their AI memory chips are sold out. You might be wondering, why is that? Well, there are two massive reasons. First is the high beta multiplier. Both of these are highly volatile semiconductor stocks. If the S&P drops just 10%, these stocks can easily plunge 20 to 35%. Second, the memory market is historically cutthroat and cyclical. In a panic, hyperscalers immediately optimize their budgets, and we fall right into the double ordering trap. Basically, buyers who are hoarding extra components out of fear of shortages will abruptly cancel those extra orders. Suddenly, those apparent multi-year backlogs vanish overnight, and multiples instantly contract. In a severe downturn between now and December, the downside risk is frankly massive. Micron could violently break its current support levels and plunge right back down toward the 650 to 750 range. Meanwhile, SanDisk, which is a high multiple growth stock that institutions tend to dump first when they need to raise cash, could easily lose half of its total value and plummet straight toward the $800 to $950 mark. When macro breaks, equity gravity is completely unforgiving. Finally, Section 6. The final verdict. Parsing signals versus timelines. So, bringing this all together, how should we actually interpret these massive declarations from Susquehanna, given our strict 7-month horizon? The best approach is to treat these extreme price targets as strong, multi-year directional signals. They are not definitive short-term roadmaps for December 2026. While the structural shift toward an AI memory bull market is very, very real, counting on these exact targets completely clearing by Christmas is extremely risky. If you are managing positions that expire in December 2026, you just cannot bank on a historical anomaly of liquidity flooding into these specific tickers in a mere 210 days. That leaves us with the ultimate question. Are you investing in a flawless 7-month AI sprint, or are you preparing for the inescapable reality of equity gravity? It's a vital question you need to ask yourself as you navigate these wild, high-momentum cycles. Please don't let extreme price targets blind you to the underlying market realities and structural valuation walls. I really hope this explainer helped bring some objective clarity to all the noise out there right now. If you found this breakdown valuable, please go ahead and hit that like button, and make sure to subscribe to the Noob Selling Options channel for more deep dives. We'll see you in the next one.